Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. So, in September, October and November last year, a few bullish patterns started to emerge. The mid-September 2023 action eventually became a pattern, an ascending scallop pattern. That led to another pattern, an early to October to mid-November 2023 bullish halfway hesitation, which in turn led to the late October 2023 to early February 2024 imperfect, breached, now broken bull channel. I'd previously suspected that the breaking of this bull channel was due to the crossover 12 weeks ago of the upper bull channel line with a significant neckline currently at 185.27, the large 2020 to January 2028 to April 2021 reverse head and shoulders button, which is highlighted in green on my daily chart. The break higher over the upper bull channel line eventually led to a move up towards a combined resistance in mid-December last year of the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2022 to January 2023 move at 201.70. Though, I suppose you could also throw in the bright red declining neckline, currently 201.70, of the April to May 2022 reverse head and shoulders pattern. Between them all, the market halted its rise and turned back down through the bull channel for the first time, and eventually stopping down at the combination of 50% Fibonacci line of the May 2019 to February 22 move at 174 even, and the August 2021 low at 174.5, down in the middle of January. We've since moved back up during late January and mid-February, just over the congestion between 187.40 to 187 even, and the broken lower bull channel line. But 4 Fridays ago, we saw a bearish engulfing pattern that closed below the broken lower trend line. And despite attempts to push back up into the bull channel, 2 weeks ago, the market gave up trying and headed lower. Such that we are currently testing the 2016 high at 179.55 and just above the important 50% Fibonacci line of the June 2020 to February 2022 move at 177.45. All this action allowed me now to draw a dark blue December 2023 to February 2024 bearish Andrews pitchfork. The market is currently in between the upper time above, which is currently at 188.60, and the middle time below, currently at 173.35. So what's next? Well, we could see the market follow this bearish Andrews pitchfork lower, which would be fine, but we have the rising medium moving average, currently 176.55, now entering the frame, as well as the previously tested and still holding strong support of the purple colored 50% Fibonacci line of the May 2019 to February 2022 move at 174.01. This is a key level to watch on the downside, especially on any significant confirmed break below it, and even more so if prices break down through the flatlining long moving average below that, currently at 170.15. London coffee. The influential pattern here from the middle of 2023 until really November/December 2023 was the June to December 2023 bear channel. Attempts to break up and out of this pattern happened as far back as late October 2023, but the real push higher happened in mid-November last year, with the market utilizing, to various degrees, the rising short-medium moving average currently at 30.05, the long moving average currently 26.34, and especially the medium moving average currently 27.42. During the process of breaking higher, the market also formed a small late October to December 2023 ascending triangle, breaking higher out of this pattern at the start of December 2023 somewhat violently. The jump up reached the primary target and eventually the secondary target topside for this ascending triangle pattern. Then there was a second larger pattern, the original broken bear channel. Both the primary and secondary targets for the bear channel also reached topside, was making new all-time highs. 11 weeks ago, I laid out the following ideas topside, and I quote, "When I do look higher, I can see a projected 50% Fibonacci line up at 3083, which may be a little too rich for some in the market," end of quote. Well, apparently this was not too rich, as after a pullback down at the end of December last year, which turned out to be a bullish halfway hesitation, well, 6 weeks ago prices reached up and punched through the 50% projected Fibonacci line at 3083. However, though we have seen prices move significantly higher, the market ended up stabilizing on top of this 50% projected Fibonacci line before last week properly punching down through it, but only as far as the next 50% Fibonacci line, the one for the whole of 2024 so far, and that's at 3002. This 50% Fibonacci line is currently being reinforced by the rising short medium moving average, currently 3005. All the action since late January has allowed me to draw a small bearish channel come declining expanding wedge pattern. That's currently 3003 to 3223. It's still fairly early on in its life, but it has 4 touches so far, and I'm interested to see if the 3000 level will hold and we see a possible 5th touch. So keep your eyes on this pattern and the 250% Fibonacci lines at 3002 and 3083.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.